I talked to you so much during the financial crisis when you were running the Prudent Bear Fund. At the end of the crisis, you sold that and moved on to producing movies, but something has brought you back to the daily grind of financial markets, and I wanted to find out what it was.
Well, great to be with you, Matt. We've certainly had some good times together being on Bloomberg and doing some other things in the past. I essentially have been a hibernating bear, and the market rallied a lot off the '08 bottom, and I was able to get out by selling to Federated, as you said, about 12 years ago. I believe that with record optimism, you look at where we are in terms of the panic euphoria index, we're at record levels. The National Association of Active Investment Managers, the typical maximum optimism number is about 80. We're about 110 today. The market, we've never seen a bigger disconnect between stock prices and where we are in the economy. Follow David Rosenberg, Stan Druckenmiller, Jeremy Grantham a lot. All three of these guys are saying that, how much higher can we really go? And Jeremy Grantham pointed out that when you get to this level of optimism, in order to keep it going, who else are you going to sell to? And essentially, we are probably within months, rather than years of a decline.
On the other hand, David, you have a Federal Reserve that doesn't mind continuing to buy assets with no limit, and a Treasury that wants to fund this government to the tune of trillions. The government now looking for another 1.9 trillion. When you have these massive numbers, these are a lot bigger than the TARP numbers from our days in the financial crisis, exponentially larger. Can't that drive momentum further and further?
So essentially, we are getting to Weimar Germany type levels in terms of lack of discipline. And, I'm not predicting that for a while. We're only, at 2% inflation, but some inflation is likely to pick up. We saw that we had personal income go up in March, April, May, with this dramatic largesse as far as paying people to sit on the couch. We're now talking about trillions rather than hundreds of billions. So we've never seen anything like that. And therefore, we love gold and silver, and therefore a smattering of Bitcoin as well, because we know we're in a fiat currency world. And, it's possible that stocks could levitate a little bit higher, but the thing is, trees don't grow to the sky. There will be a price to pay from all this.
What about gold, David? I've been watching Bitcoin for years, and it's not failed to impress me. The rally that we've seen since basically December of last year has been incredible. Gold hasn't kept pace. Why aren't people who buy Bitcoin because they're worried about this magic money tree theory also buying Krugerrands?
That has been a little bit of a disturbing factor for us gold bugs, for sure. I think Bitcoin obviously benefited by, PayPal making it easier. There's been, a massive, speculative euphoria, taking it to 50,000. I think gold is going to catch up. In a recent letter, I also run a gold stock hedge fund investing in precious metals equities. And I've said that this Bitcoin rise, I believe, is going to be a precursor to gold and gold stocks going up a lot. So I think that's simply coming. And I do have a bit of a fear for Bitcoin. It's gone up so fast, so quickly. And now there's a move in India for legislative action to ban it and let people get out gradually over 3 or 4 months. We also know various governments are putting together their own blockchain-oriented currencies, and you wonder if they're going to be as receptive as they've been in the past to welcoming Bitcoin.
So have you sold? I know you were a buyer of Bitcoin last year, David. Have you sold your holdings?
No, I'm still there, but I'm not big in size. I wish I would have been more aggressive early. We actually have some of it in our gold stock investments that we make for clients, a small portion. But, I'm saying that it could certainly go up a lot more. So it's a great asymmetric bet, but then it's not a panacea either. There's certainly some risk.
What do you think of the new administration? I mean, I'm sure the spending plans have you concerned, but I've read also that you're worried about tax policy and the business friendliness of the Biden administration.
Well, obviously, Matt, because we now have a new administration, it's obviously a lot less business friendly than the Trump administration. Trump administration cut taxes, cut regulations, and all those are going in the opposite direction. It looks like the Republicans no longer can stop, in the Senate, having two losses in Georgia. All these are disturbing for capitalists, and therefore there's risk to the market from that administration. And frankly, that has not been considered by this current euphoria in stock prices.
One thing that's a little bit comforting, I would guess, is people have saved. Those who can, David, have boosted savings. Those who haven't lost their jobs in this crisis. Does that make you a little bit more sanguine about the coming, what you view as the coming crash?
Well, it's always good to pick up the savings rate. And we have thrown so much money in terms of, I think it's $6.5 trillion of additional debt. It was recently pointed out that we ended up increasing the debt after this recession more than the prior 5 recessions combined. We ended up buying more treasuries in 3 months, the Federal Reserve, than had been bought for the 10 years prior. So we certainly have, unprecedented levels of monetary, mania. And that's something to be concerned about, and why you really need to be owning gold and silver here.